Podcast. I am your host, Dakota Grady. Welcome to the podcast, y'all. Sponsored by Upstate Essential Solutions. If you need help with accounting and taxes, contact me today. If you're a transportation entrepreneur, a med spa owner, or esthetician, you need help with bookkeeping and taxes for your business, contact me at dakotagrady.com. Oh, and by the way, if you need help with your personal finances too, I can help you with that as well. Again, the website is dakotagrady.com for resources about bookkeeping, taxes, and personal finances to help you live the life that you want in abundance. Hello, y'all. Welcome to the podcast. Today, we're focusing on what is an S corporation and what do you need to become an S corporation, how to run that in 2024. So, we're going to dive right in to the podcast today, y'all. So, thank y'all for joining me. So, what is an S corporation and how do you operate one in this day and time? So, an S corp is basically like an entity separate from its owner. It's separate from an LLC in terms of like a single member LLC, separate from a partnership as well. It's different from a sole proprietorship because it's its own entity. Now, with other things, a partnership has its own return too, but a single member LLC, like I mentioned yesterday, the income expenses they are reported on Schedule C of the 1040, which is the individual income tax return, right? But if you're an S corporation, an S corp has its own return, and the individual shareholder or owner has a personal return to report the income from the business as well. How do you set up an S corp? Great question. Well, I recommend first setting up an LLC, single member LLC. You set that up with Secretary of State. Once it's approved by your Secretary of State, make sure the name is available. You fill out the paperwork, you get the articles of organization. Then you go to the IRS website, set up the EIN. All right. And then you want also complete form 2553, which is basically you want to elect to become an S Corp. Because initially, you're setting a business up as a single member LLC, right? So it has the protection of your assets being protected if someone were to sue you. Well, an S Corp has the same protection as well. It's just set up as a separate entity. Once you complete that form 2553, you send it to the IRS, and then you wait and wait and wait and wait. You wait until they approve you for the S Corp status. Once they approve you, you'll get a letter from the IRS saying, as of this date, you're basically an S corporation. Then you become an S corp. So S corp is set up not only on the local level, state level, it's set up established by the federal government. So I've had friends who have set up an S corp for their clients, and they submitted paperwork, and they basically went ahead of the process by setting the employee or the shareholder owner up as an employee, right? But then the IRS doesn't accept the S corp status. Then we have to unravel all the payroll that was done. True story. Basically have the payroll undone, amended, and then send back to the client. I have had to do that for one of my clients too. And then one of my friends' clients had to do the same thing. Basically, amend the payroll tax reports because as a single member LLC, you can't be an employee of the business because the IRS sees you and the business as the same. However, as an S Corp, you're required to become an employee of the business to pay yourself a reasonable compensation. What you can do is look online and see what other people in similar industries are doing in terms of activities, in terms of duties, roles, and then what they're paying themselves. All right. So if you have a similar industry, say you're a med spa owner, right? You're in the med spa space. If you're, say, the owner of the business, go see what other people are doing, say in California. You may be in New York. See what other people in similar industry is doing, what their duties are, responsibilities are, and what they're paying themselves, and pay yourself something similar as well. So that's one way you can do it to find your reasonable compensation and pay yourself something that is fair. Now, you also could take a distribution of the income for the business. But first, you must pay yourself a reasonable compensation because if you don't, what's taxable is basically the income from the business, right? So the IRS doesn't want you to take a distribution, right? Because it bypasses self-employment tax. When you become an employee of the business, you pay taxes on those wages. So the money you take out for W-2 income is taxable. But the money you take out as a distribution would bypass self-employment tax. That's why the IRS doesn't want you to just take out all your income as a distribution because you won't pay taxes on it. In terms of self-employment tax, you'll pay capital gains tax, possibly, and we'll get into that later as well. But the whole point is you want to become an employee of the business, pay yourself a reasonable compensation, and then you also want to set up bylaws for your business. Bylaws is basically saying how you're going to operate the business in a nutshell. So set up the bylaws. You can look at different things online and see what bylaws other people have set up. And then once you do that, you can just emulate what they did, put in information that is similar to what they're doing, but just change the name of your business. And then some things might not apply to you, but just get a blueprint to set that up. You can go online and get one, or you can go maybe to an attorney, have them set up for you, but you can create bylaws to set up what you're going to do and how you're going to operate your business. So reasonable compensation, one, bylaws, two, and one thing people don't know about, I think, in my opinion, is what is called an accountable plan. What is that? Great question. Once you become an employee of the business, at that point, whenever you buy something for the business, so you're going to buy some office supplies or you're going to go travel on behalf of the business, if you want to get reimbursed for those expenses, you have to set up an accountable plan, basically saying, I'm going to reimburse myself as an employee of the business for anything I purchase on behalf of the business. So if I'm traveling to, say, going to California again, I'm in New York, going to California to visit a client or to establish a business there, clientele, prospect, right? And I'm using that as a business expense. I must use my personal debit card or credit card if you use credit for those expenses, travel, right? Keep receipts and then submit them to basically someone who's in your office manager, or get your bookkeeper or CPA to be the person you submit things to. You basically want to substantiate what you spent the money on for your business, whether it be travel, again, office supplies, whatever you spend your money on, use your personal funds, submit an expense report, receipts to the person. Once they approve it, then you reimburse yourself by writing a check. At that point, you're reimbursed and the business can write that off as the business expense. However, if you don't have an accountable plan in place and you don't do the process I just told you about, say you are using a company's credit card, right, for the travel. What happens is you're not reimbursing yourself. You're just using the business credit card, right? Well, that particular purchase isn't deductible for you in terms of the business, and then that particular payment will be income to you because, again, you didn't follow the process of reimbursing yourself the right way. So I've had clients get upset with me about this particular thing because they didn't want to reimburse themselves the way that they were supposed to. They'd rather use their debit card, the business credit card that is, and run the business like a single member LLC. You can't do that because the IRS has guidelines that you must reimburse yourself, and that reimbursement process must be set up through the accountable plan. And again, I don't think many people know about this as an S Corp because people say, oh, set up an S Corp, set up an S Corp, set up an S Corp. Why do you need to set up an S Corp? I recommend setting up one when you make at least $50,000 or more in your business, so you pay yourself a reasonable compensation, one, and two, you cover any expenses you have. So you go to a CPA or someone to set up your S Corp, they're going to charge you fees, right? So it may not even be feasible for you to set up an S Corp because you're losing money on that. You're not making any savings on that. You can make savings by becoming an employee, of course, but what if you're not making enough revenue to cover your expenses, to pay yourself a salary? It wouldn't make sense to become an S Corp then. So first, I believe getting your income up at least to $50,000 or more. Evaluate whether S Corp is good for you because you can become an employee, hire employees to work for you, a team member to work for you, right? All the other expenses you can get, office supplies, you can get advertising, marketing, meals, 50% of course, but you can deduct all those things that are ordinary and necessary expenses for your business, all right? So the S Corp is very important in terms of the accountable plan because want to make sure you understand that part because I don't think people really understand that part about the accountable plan. It's vital that you have one set up, understand what it is first, get with a professional to help you set one up, and then follow it. Because you cannot run an S corp like a single member LLC. People do that. I had a client in Florida, I believe. She wasn't an employee of the business, one, and two, she didn't have an accountable plan in place. So everything she spent would have been basically taxable to her. She didn't want to believe it and she got upset and now she no longer a client. But I'm like, well, I don't make the laws. I just tell people, my clients, to be in compliance with those laws. So the S corp is a good benefit for you if you make 50K or more. You're ready to adhere to the accountable plan that you need to reimburse yourself, and that you're just willing to do those things, right? Play the game the right way. Some people don't want to play the game the right way. They want to do it the wrong way. Well, that's life. And when you don't do things the right way, you may get caught, may get audited. I had a client who was audited years ago because someone was stealing from her and she was getting government money. And I'm like, well, I did my part in terms of getting her bookkeeping up to date, but people have to take responsibility for themselves and make the right choices to do the right thing. So if someone is advising you to do the reimbursement, do the capital plan, follow the instructions to do it, it's only helping you and not going to hurt you. So I hope this was helpful for you in terms of understanding S Corporation. Make sure you subscribe to the channel, comment, like, share, and let me know your thoughts on it, what you want to know more about in terms of business, accounting, taxes, and personal finances. So thank you all for joining me for the Coins, Cashflow, and Conversations podcast. I am your host, Dakota Grady. Our website again is dakotagrady.com. Our book is available there as well. My journal, you can get a copy of it email me at dakota@dakotagrady.com. And lastly, on my website, there's a free resource for you that can help you with tax strategies for your business. Go to dakotagrady.com, click on the tax strategies link, and you'll see the resource for you to help you save money in your business with tax strategies. Again, thank you all for joining me for the Coins, Cashflow, and Conversations podcast.